The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tattlebaum. These are your headlines. US President Donald Trump cuts tariffs on China to 47% after a, quote, 12 out of 10 meeting with Chinese leader Xi Jinping, adding that all restrictions around rare earths have now been lifted. The Fed cuts rates by 25 basis points to the lowest level in 3 years, but markets waver as Chair Jerome Powell pushes back against assumptions of another cut this year that is baked in.
There were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Airbus posts a third quarter net profit beat and confirms its guidance, even as it lowers the production target for its A220 jetliner. The CEO, Guillaume Faury, tells CNBC the playmaker is successfully navigating tariffs.
The visibility and the anticipation would be good enough to not lead to disruption in the supply chain and postponing deliveries of aircraft. Again, we are very far from that situation. For the moment, it's well under control.
In reverse, Volkswagen swings to a 1.3 billion euro operating loss as U.S. tariffs and an EV U-turn at its Porsche business take a bite out of the German automaker.
We kick off the show with developments around the trade situation in China, as President Trump said he would lower tariffs on Chinese exports by 10 percentage points to 47%, effective immediately, putting the levy below that imposed on countries like India and Brazil. This after a long-awaited meeting with his Chinese counterpart Xi Jinping, in which Trump said a dispute on rare earths had been, quote, settled. Trump added that Nvidia was also on the agenda, saying China will speak to the company, but that the firm's flagship Blackwell chip was not discussed. Trump added that he will go to China in April, with Xi heading stateside sometime after that. President Trump explained the tariff decision on board Air Force One.
Many other things like that. On fentanyl, we agreed that he was going to work very hard to stop the flow. You know, it's a very complex subject because it's used for lots of different reasons, including anesthetics and things. But he's going to work very hard on it, precursors, and I think you're going to see some real action taken. I've agreed, as you know, I put a 20% tariff on China because of the fentanyl coming in, which is it's a big tariff. And based on his statements today, I reduced it by 10%, so it's 10% instead of 20%, effective immediately.
So we've got a market grappling of what to do with this trade news, and to me, it is both sides promising not to do their worst. I mean, we saw ratcheting up for weeks ahead of the negotiations. Now it feels as though we don't have the worst case scenario. So we started with a framework deal. We've had declaration of a deal, but we still need a trade deal. I think Trump papering over that to an extent by moving on one of the tariff rates already, that 57%, that is now 47%. The market was looking at this so-called fentanyl tariff, the 20% that was lobbed, to see whether it would be removed altogether or simply just lowered by 10%. We've had the lowering of 10%, so perhaps still more room to move on this. For me, one of the big wins could be potentially for soybean farmers. There's been effectively no buying. It only ramped up ahead of negotiations where the first cargo was purchased from this year's harvest, but billions have been lost from some of those soybean farmers. And the reality is that Chinese have been substituting from South American options of Brazil and Argentina. So will that automatically snap back at some point down the track?
I think it was equally as interesting what wasn't discussed in this conversation. There was a lot of expectation that we could see Blackwell chips feature and that we could see an agreement around Nvidia beginning to sell Blackwell chips into China. And it sounds like there was no progress on Blackwell specifically, and Trump instead saying it's up to Beijing to speak to Nvidia directly. So that was an open piece. And then oil. There was also some expectation that President Trump would bring up China's purchases of Russian oil during this meeting, and instead that didn't feature. It sounds like there was a lot of talk about Ukraine, but nothing specifically on oil. I would say in terms of the takeaways here, probably one of the most encouraging pieces to take away from this is that President Trump is planning to travel to China in April. So clearly relations have improved if he's planning to make his way over to the country itself.
Yeah, it's been a long time since the two leaders met face to face. So I think significant progress on that front. But as you point out, NVIDIA, that is fascinating because we were debating yesterday as to whether the Chinese would take any overtures here, take those chips to try and race ahead in AI, or really cut off its own access and trying to speed up that acceleration of its own chip development program. So to your point, worth seeing what happens on the back of the NVIDIA story. We're going to have plenty more on this developing story live from South Korea at the bottom of the hour. Meantime, it is fairly heavy on the corporate earnings front today. We've got Shell hitting the tape this morning on its third quarter results. Unaudited, the Q3 cash flow from operating activities at $12.2 billion US dollars. Q3 dividend 0.358. The adjusted EPS is at 0.93 US versus estimates of 0.87. So topping those expectations. The debt rolling across for the 3 months at $41.2 billion. And when it comes to those adjusted earnings, I look at that versus estimates for Q3, 5.4 billion. The IBS estimate was settling at 4.4. So again, a beat on that particular line. EBITDA at 14.7 billion. We've got a share buyback program, the 3.5 billion. That's part of the numbers today. The CapEx plan, cash capital expenditure range for the full year, is expected to be between 20 to 22 billion. So a couple of lines there on what it intends to spend. But also worth noting, there was an impairment charge in this period as well. So for the 9-month income, impairment charges amounted to a net loss of $1.2 billion. So a few lines there as we take stock of the company, Juliana.
Well, before we push on to more earnings, I want to bring you some lines from China's Commerce Ministry. Now, we've been waiting to hear from the Chinese side. You heard from President Trump, as you just heard moments ago, around this conversation between Xi and Trump. And now we're hearing from China. China's Commerce Ministry saying that they have agreed to continue extending some tariff exemption measures. China has agreed to adjust some countermeasures. They will suspend shipbuilding measures against the U.S. for a year. They're going to pause on October 9th export control measures for a year. China saying that both sides reached consensus on fentanyl cooperation and to expand agricultural trade, which is exactly what President Trump said. The Chinese Commerce Ministry saying they've reached consensus on a probe into some companies. China will properly handle TikTok-related issues with the U.S. No detail around what those issues are, but they will properly handle them, the Chinese are saying. And China will pause countermeasures related to the 301 investigation for a year. So by and large, it sounds like the Chinese are corroborating what President Trump has communicated so far, and it looks like a de-escalation in terms of the tensions that have built up between China and the U.S.
But without the language, the amazing meeting or any sort of verdict on what type of meeting, whether it was a 12 out of 10, we haven't got that sort of commentary from the Chinese.
We're still waiting for that rating from Beijing. Well, we will certainly monitor any further lines that come out of China over the next few minutes. But now let's turn our attention to Carlsberg, because the earnings continue to flood in here in Europe, and numbers from the brewer are just coming in now. Carlsberg posting Q3 sales slightly below expectations, but they have kept their full year profit guidance. In terms of the detail, reported volume growth coming in 16.2%, but organic volume development down 3%. A lot of the strong reported volume growth, that strong 16% number, has been driven by Carlsberg's Britvic acquisition. When you are looking at regional growth, they have seen growth across all three regions in terms of the revenue growth that they've seen. And again, in terms of the expectations component, they have kept their earnings expectations the same. Organic growth and operating profit before special items with 3 to 5%. Well, let me push on, because we have got somebody who's going to share a lot more than just those headlines with us, and that's Jakob Andersen, the CEO of Carlsberg. So thank you, sir, for being with us this morning and joining us to flesh out these numbers. I think when it comes to your sector right now, the industry investors are very focused on volumes to try to understand whether we are going to see an uptick in volumes anytime soon. So let's start there. How would you describe the quarter in terms of volume development?
Yeah, thank you, and thanks for having me this morning. You're right, there is a big focus on volume from all of us. What we've seen over the last couple of quarters is that we've seen a very hesitant consumer globally, so it's hard to pick any market where we haven't seen some sort of of consumer slowdown in 2025, and the Q3 momentum you're seeing is roughly unchanged compared to Q2. So we're seeing a weakest consumer that is, of course, driven by both the quite significant price increases we've seen over the last couple of years on household goods, but also the broader geopolitical uncertainties. So as we look at our Q3 numbers, we're actually quite pleased with the underlying performance in what is a weak environment. We continue to hold or take share in our key markets, and as long as we do that, we know we're powering ahead in terms of underlying momentum. But right now, headline volume growth is it's harder to go by.
Where are you taking share? You say you're taking share in some of your key markets?
Yeah, so if we look at the 25 biggest markets we operate in, we're holding or taking share in almost 20 of those. So that's key for us. You're talking about one of those key markets earlier in this program. So China, again in this quarter, we take a bit of share in China. So we're flat in China, a Chinese market that is down in the quarter. We're seeing us take share in the UK, which is another very significant market for us. We're taking both share in beer and soft drinks. So there's a lot of strength in the business, and for us, the slowdown we've seen in volumes over the last couple of quarters, that's externally driven by a weaker market, but it's good to see that we have that underlying momentum.
Jakob, it's Karen jumping in. Good morning to you. Can I just dig into that sequential improvement in Asia a little bit further, because the marketplace has been waiting for any signs of life around the Chinese consumer, that they are actually turning the corner. Would you say that's happening with the Chinese consumer?
I think it's a big statement to say turning the corner, but I think we're seeing a stabilization. If you look at the numbers here in the Q3, overall Chinese market is down around 2% in the quarter. We're flat. It's not dramatic drops we're seeing. We're seeing a relatively stable market. It is tough. The consumer is weak. You look at the overall consumer confidence numbers in China. They are not great, and they haven't been for more than 18 months at this stage. So I'm not going to call a major change, but I think we'll continue to power ahead on a relative basis in China. It's a significant market. It's also a profitable market. It's important for us. And as I look into Q4, we also expect to see a bit of growth in Q4 for us there. So China remains important. And of course, all the backdrop that you've been talking about this morning, it's also important in that context.
Talk about Western Europe. We are getting information at different points over the reporting season that suggests the retail consumer is not actually in bad shape. We've still got the tailwind of slightly lower interest rates. People still have jobs. We saw even in the UK yesterday, Next producing very strong results on a full price ticket item basis. What are you seeing for Christmas as we count down some of the Western economies? Does it look like it's going to be a decent Christmas?
I think in the context of the stabilization we've seen the last couple of quarters, I think it's going to be an okay Christmas. I'm not going to use the word decent. The Western European consumer is quite cautious in terms of how what they're putting in their shopping basket at the moment. We see many beer markets across Europe that are unfortunately down low single digit at the moment. On the other hand, if we look at our own business, Western Europe was a strength again this quarter. If you look at our numbers in Western Europe, where our organic revenue growth is positive when we adjust for the San Miguel effect we had 1st of Jan. So that positive underlying growth is super important for us. So if you look at the numbers we report today, just like on Q2, Western Europe is actually a position of strength for us, and it comes through again here. We have a strong Northern Europe. We have a UK where we're taking share, and then we have a couple of the big economies like France and Germany, where the markets are more subdued.
Jakob, let me ask you about your growth categories. Looking across the different segments here, Beyond Beer stands out, down 10% when you look at organic growth over the period. Certainly not what you hope to see in what's a growth category for your business. Shed some light on what's going on in Beyond Beer.
Yeah, happy to. So we talk about 4 growth categories. So premium beer, it continues to grow. It's up 5%, as you can see. Alcohol-free, it's up 6% when you adjust for the war in Ukraine. And then soft drinks is up 4%. The one negative is Beyond Beer. And when you look at that -10 number in the quarter, it's driven by literally 2 markets. It's driven by the significant drop in Ukraine, and it's driven by the very weak market in Poland. If we take those 2 out, the rest of our markets, we're actually seeing underlying growth. We're seeing a lot of innovation in the space. But we have to say some of the Eastern European countries were very early movers in this space, and we're now being hit quite hard by the effect of that in 2 major markets. But we do have an undiminished faith in the growth potential of Beyond Beer. It's a very evolving scene. We need to keep on innovating. We're super excited about it, and especially some of our brands like Garage, which is a hard lemonade, or Somersby, our cider brands. They're growing very fast. So overall, there's no change in our strategic focus on Beyond Beer.
Jakob, can I ask you then about what comes next from here? Because it feels as though the environment might be more conducive to consolidation. If volumes are a challenge, the consumers are a challenge, then even bigger businesses from here would seemingly make sense. Do you expect a wave of consolidation in the sector?
I think we've seen over the last couple of years, we have seen some major consolidation. As you mentioned in your intro, we did Britvic as a major step up in terms of our broader exposure to soft drinks, so just Beyond Beer. And we're seeing great growth in that asset. We've seen some of our competitors have done major acquisitions this year. I think that continues in the sector. From a Carlsberg perspective, we are not out there looking for acquisitions. We have a phenomenal portfolio now that we can drive a lot of growth out of, and we firmly believe in that. We especially firmly believe in the combination of soft drinks and alcoholic beverages as a proposition to our customers. We see significant synergies from that and growth momentum. So we're going to be powering ahead mainly on the organic agenda, and then on major partnerships like some of our major partners like Pepsi, where we've been adding new countries in recent years. So I think from a Carlsberg perspective, it's more organic, but I think when you look at the broader sector, no doubt that there will continue to be consolidation.
Jakob, thank you so much for the answer. I appreciate you taking the questions and joining us today. Jakob Andersen with us, the CEO of Carlsberg. We are tracking three big tech earnings movers in US extended trade. Alphabet shares are higher after a third quarter beat, revenue passing $100 billion for the first time ever on the back of 34% growth in its cloud division. Meta, though, moving lower despite quarterly figures ahead of expectations. Actually, when they hit the tape, they look strong. The company raised its CapEx guidance, though, for the year and said it expects faster spending growth in 2026 as it continues to bet big on AI. And I've got to say, Mark Zuckerberg really went for it in terms of the spending. Over at Microsoft, meantime, it also raised its spending outlook, now expecting CapEx to grow to 2026 from previously forecasting a drop. That is weighing on shares despite a third quarter beat, with Azure cloud revenue jumping 40%. And a look at how we're shaping up on US futures. As a result, we're looking to pull higher at the start of the session. Yesterday, a bit of a mixed picture. We did see some intraday records, but it really was just the Nasdaq holding on to those gains. The other boards slipping into the finish.
Coming up on the show, U.S. President Donald Trump met with his Chinese counterpart Xi Jinping in South Korea today, where the two leaders reportedly agreed a deal on rare earths. Sherry Kang will bring us the details. Plus, the ECB will announce its rate decision later today, hot on the heels of a 25 basis point cut by the U.S. Federal Reserve. We'll break down what to expect, and Norwegian telco Telenor posts a narrow third quarter earnings miss and revises its guidance downwards as it flags headwinds in Asia. We'll speak to the CEO after the break. Welcome back to Squawk Box. The U.S. Federal Reserve lowered interest rates by a quarter percentage point as expected, though Fed Chair Jerome Powell struck a hawkish tone, warning that another cut in December is far from certain. The decision saw dissent from Trump appointee Stephen Miron, who preferred a 50 basis point cut, and Kansas City Fed Chief Jeff Schmidt, who voted to keep rates steady. In terms of market reaction, you can see on your screens there, the 10-year currently trading above 4%. Yesterday, we saw the 10-year spike about 10 basis points. So clearly the market taking it as a hawkish cut. Now, the central bank also announced it would halt its balance sheet runoff program from December 1st amid rising liquidity concerns. The market had been expecting this in a whisper expectation that they would halt this tightening, and they indeed did so. Take a listen.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard.
The central bank action continues with the ECB's rate decision later today. Don't miss decision time from 1 p.m. London time on CNBC and the CNBC International Live YouTube page. Karen will be taking you through all the breaking news. You can also watch Christine Lagarde's press conference in full on the CNBC International Live YouTube page. That's from 1:45 London time.
Let's push on to more numbers. Telenor posted a narrow third quarter earnings miss, with the Norwegian telco reporting adjusted EBITDA of 9.54 billion Norwegian crowns against a forecast of 9.6. The company said it took a hit of 500 million Norwegian crowns due to rising costs in Malaysia. Benedicta Schilbred-Fasma is president and CEO of Telenor and joins us now. Benedicta, thank you so much for joining us. Looking into the numbers today and looking at your financial outlook now for the year, where you've given us some firmer numbers, 2 to 3% organic growth in Nordic service revenue. Just weigh in on what you're seeing in terms of the strengths, the tailwinds in the business.
I think I'd like to start with the strength. And good morning, and thank you for inviting me. I think, we are delivering very solid and robust results in the Nordic, and we are, the leading operator across all 4 Nordic markets. The development in each market is somewhat different if you go across, but overall we have the benefits of good top-line growth, very good transformation programs, making us more efficient, giving us an EBITDA growth in the Nordics of 8%. And we are also delivering 50% more cash flow in the quarter, 4.2 billion on a group level, which I also think we have a reason to be fairly satisfied with. Coming back to Asia, in the quarter we had a growth of 4.1% across the businesses or our portfolio companies in Asia. But there is somewhat a little bit of a mixed picture behind those numbers. We have had 17% growth in Pakistan, which is a business that we are in the process of selling. And fortunately, we got our first approval from the Pakistani authorities this quarter, which makes us very optimistic that we are going to close the transaction within the coming months. And we're also very happy to see that Grameenphone is back to growth in Bangladesh, giving us, but the growth is somewhat softer than we had hoped for. In Thailand and Malaysia, we have minority stakes in 2 leading operators, or the leading operator in each of the markets. Nice. And they had somewhat softer results, but also delivering fairly okay.
Benedicta.
Yeah,
let me ask you about one of the big trends in the industry, and that is AI, the amount of connectivity that is going to support this huge AI development that has been playing out. And I can see that you're looking to spend about 14% of revenues on CapEx for the Nordic business. The big news flow has been around the NVIDIA tie-up with Nokia. We know that you take a lot of product from Nokia. How do you think that's going to change the relationship and the sort of products that you're going to be getting from Nokia down the track? And what are you seeing in terms of this CapEx cycle to support AI?
I think, first of all, I think what Nokia and NVIDIA announced, I guess it was yesterday, is a very interesting development. And I think it's actually very promising that we now have, a big technology shift in AI that will also be implied into our, core infrastructure. So I'm actually very optimistic about that. If you look to how we invest our CapEx, it's fair to say that we still invest a lot in our, core infrastructure. We are building up resilience and robustness because we are a very important part of the total defense in the markets where we operate. And we also are having an increasing portion within AI, both to make ourselves more efficient and to, smoothen operations, but also to, we are looking at some exciting opportunities where we also try to do it towards the customers and, capitalize on it from a business perspective. And we also have a big project together with NVIDIA in that regard.
Benedict, I want to get into that a little bit more because it's been a long time since the industry had deep pockets anywhere. It's been very cash-strapped for a long time. But the fact that NVIDIA's now come into the mix when it comes to developing telecoms equipment, do you think that means you get faster innovation, better products? Does it change the duopoly effectively between the likes of Ericsson and Nokia? I mean, how do we think about this?
I think for us, it's very important to have strong and innovative suppliers, into our networks. And I think the fact that you see such a leap in approach in the network systems or in the RANs will be a new opportunity for the whole industry. It's a bit early to say exactly how that will pan out, but we will follow that with great interest. And as you say, Nokia is already, and NVIDIA are two very important partners to us. So I'm sure that we're going to touch upon this fairly soon.
Benedicta, good morning. Let me just wrap up on the outlook for the rest of 2025. I can see you're looking at 2 to 3% organic growth in Nordic services revenues, 8 to 9% organic growth in EBITDA in the Nordics. Can you flesh out what's going to drive the growth and what you see as the potential headwinds through the rest of the year?
Yes, we are giving guidance now for 2025, and we have a little bit of a longer perspective in our views when we come to our Capital Markets Day on the 11th of November. But with 3 quarters kind of pocketed for this year, we are very confident that we will continue to deliver strong and robust results in the Nordics, both on the top line and on EBITDA. We have said that we will have a capex to sales of around 14%, and we are also delivering or confirming that we will deliver around 13 billion in cash flow for the year. However, we also said that the proportion of that cash flow will be increasingly coming from, or to a large extent coming from the Nordic markets than from our Asian operation than what we've guided on earlier in the year.